Okay, guys, good afternoon. How are you? I hope you had a good trading week, and I hope this volatility that's coming into the market should be something that hopefully you are able to capture some of it. And so because today, with the events that's going on in the market, I kind of want to open it for you to give you the choice of what you want to do, because I'm sure most of you have positions, and most of you would like for me to look at one of your positions or to discuss them. So, what do you prefer to look at? Do you want to go something? Some of you, okay. Mike is talking about the euro. Now, all of you guys, you all know, I mean, I am a very big proponent of somebody that has to be doing his homework, planning his trades, knowing where he's going to buy and where he's going to sell. And if you do that homework on a consistent basis and do it in a way, using a systematic methodology, you will be putting yourself on the right side of the market. So, talking about the euro, and there is a reason I said that. Now, when we analyzed the euro about 3 weeks ago, now if you look at, we use the index, so I want you to look at the euro index, and you will see something that is, okay, I'm going to share something here with the euro, which is very, very, it's a very rare event when this thing happens, but it's very important for you. The euro has been, as you can see lately, from the April up to now, this is what's called the diamond formation. Okay? And all of you that are the ones that come with us in the trade planning session, we have been discussing that. And this, you see, what the diamond formation usually happens when it's preceded by a big move to the upside or a trend. And once you have this move up, it begins to move into what we call a trend changing pattern, or a consolidation. And of course, it takes a while for the trend to change, and that trend change, the trend goes into what is known as a price acceptance or an equilibrium, and that price acceptance zone begins to take shape as either it's going to change the trend and roll over and come down, or it is going to pause and go up. One of the patterns that is extremely bearish, and it is one of the high patterns which are very highly reliable, is what's known as the diamond formation. It is a very rare pattern. It doesn't appear very often, but once it does, it is actually one of the ones that will pay you tremendously. Now, before I go further, I want you to see that we have this golden line here. See this golden line? We use something that's what I call the structure point, a significant point. But this golden line, which is at 138.36, this is the golden structure point where the euro would have identified for us that it's going to change the trend. And this is where so I want you to see now, it begins to create, it starts making a lower high, and a low, and then makes a lower low, and then it pushes up. And you can see that now it's like a diamond. I mean, if you put a line like this, it is pretty much a diamond shape, if you will. And that diamond right there is the biggest and the most powerful bearish pattern that you can see. And this, the 138.36, was the structural failure point or the trend change point from the diamond pattern, and that's why we labeled it with this golden line so that we can take it short. And you can see now it begins to tighten because the two edges of the diamond are tight. And once it breaks, and that was our first trade, and that you see now the break that we had here from the diamond is at the structure point, which is the 143, and this is where we began to initiate our shorts in the euro. Now it comes down to the diamond structure or the golden structure point when it broke it. Now you had the capitulation, the 200 pips that we over had the last week, and now this is now where we are, and we're pushing down again. So we are technically in the euro now in a bear market. This is a trend changing. We are in a bear market, and this pattern here is, as I said, a big one of the most bearish patterns, and we should be looking at the first test at probably somewhere for it to go back probably somewhere around the 129 or the 128, somewhere out there, because now if it breaks below, and it already is, I mean, you should be already short now the one at 134.46. You should be looking at probably a test of around the 129.60, or I mean this area of those two structure points, because this now is a momentum low and this is the lowest low. So with that, that's the euro, and this is our position in the euro. We are short. So now, does anybody have? Does this answer your question about the euro, Mike? And this is where we took the short. I want you to see that. This is the short where we took it, as I told you, right below the 143. So we're short from the 140, and the trade is still open as of now. So we're about. So this is the euro, and this is where basically it should be. The same thing happened with the pound, but it didn't have a diamond formation. But the pound also has broken below one of the significant points, and these are the significant points if you want to write them down. These are the significant points on the structure point. A structure point is more or less a trend changing point. So if it gets up the dollar CAD, we're long the dollar CAD from 98.30. We are short the dollar Swiss from 99.28. The dollar yen, we're basically short from 76. It's doing nothing. We're long the pound Aussie. We're long the pound CAD. We're short in a different account. We're short the pound dollar from 157.80. And the Aussie dollar, this is our trade. We're short the Aussie from the 103. Now, this, guys, what you should be doing before you come to the market every Monday morning. You have to know exactly where you're going to go long and exactly where you're going to go short. You want also to know the difference between just a long point or a very strong point. You want to be the difference between a strong short or just a short. You want to go a difference between a buy point and a strong buy point. Okay? And we populate all these data and we put them in the radar screen. And so what we do now, we know that the euro dollar, so if you want to look at the euro dollar, which pair do you want to trade the open now quickly, because it's going to open in 5 minutes? Which pair do you want to trade? Okay, just Mike, would short-term bounce, would you? Oh yes, absolutely. I will short the any bounce to the upside. Okay, so somebody wants the euro yen, somebody wants the euro dollar. So the majority wants the euro dollar, so we'll use the euro dollar. Now looking at the euro dollar, now we know basically we're below. That is quickly. I'm just gonna. This is our structure point. We see the 134.46 right there. This is a significant point. So what we do is we place it right here, 134. I prefer a little bit on the longer term, Igor, but sometimes we do day trade. So, but you day trade with an understanding, okay? So take a look. You take your bias from, I mean, when you day trade, you take your bias from the long-term chart like this. So now I know I broke. You see, this is my golden point, the 138.63. And right here, when it broke it, when it came back above it, and right here, this is your second short, and that is the move. So from that day on, from this day, from September the 16th, okay, it's below the 138.36. I am looking only to day trade the euro from the short side. And this goes to your answer to your question also, Mike. So now I am below my structure point. Now I'm below my trend change. So now the trend is down. I'm not looking to buy the euro. I'm looking to short the euro. And therefore, any move up like this is a selling opportunity. Any move up like this is a selling opportunity. So in the, just 1 second. So in that, since I am below my point, all what I'm looking now is looking to go short. So once I set up my ranges, and it's going to be updated right now, once I set up my ranges, I am going to be looking at taking my trade. My bias is to still to the short side. And like today, this morning, I mean, this is the trade that we had this morning. This was our short again. Absolutely, Igor. You cannot, these trades, if you buy the euro, I mean, like this move and a move to the upside, it is going to be, look at this, look at the move up. Chop, 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 all that move up. But while it's coming down in the direction of the trend, look how the big move is. So you don't want, you're better off. You see, there are 4 things that you need in order to become a successful trader and actually be able to make money in the market. The first thing you need is rules. And these rules are the rules that you're comfortable with, that you do every time, you know what they are, and you follow them. The second thing you need, and it is as important as the rules, you need portfolio selection. You need to know what you're buying and when you're buying. You don't fall in love with the euro and you trade the euro every single day. Okay? You buy something where it's moving. All right? And the third thing is you need to get in at the right time and you need to get out, the fourth thing, at the right time. So in this case, I'm taking the euro on the short side. So if now I have a move up here, this is my range. If I have a move to the upside, that to me is an opportunity for me to go short rather than it is an opportunity for me to go long. All right? So let's see what we're having here in the market so far. So let's see what we have. The dollar Swiss, the pound dollar is not bad, and the euro yen is actually not bad because they all have narrow ranges. And so let's see them. We're going to set up our auto workspace. This is what we call our auto workspace, so that we're going to begin to trade. So we're going to choose which ones we're going to be trading right now. So while this populates, I'm looking at my radar screen to see which are the possible candidates for a move. So the euro now, I'm staying short until it gets above the 134.46. The pound Swiss is also decent. I'm looking for the small ones, the narrow ones. Okay, okay, so if you look at the pound Swiss, you already have, so look at this, you got the move to the upside, Igor, and now that is your move. So if it breaks up here, then I'm going to take the trade to the upside. And actually buying the pound Swiss above 140 is a good buy, and that is one of our momentum highs, which is the 140.02. So that is probably would be a good setup. All right, that is your pound Swiss. That is would be a good buy to take the pound Swiss above the 140 level when it gets above the range. You want to look at the pound dollar. Somebody wants the pound New Zealand. The pound New Zealand is good. It's actually a good buy. It's still in a bear market. It's still down in a bear market, but you're getting a little bit of a push up here. So, yeah, it's based upon the liquidation that's happening in the Aussie. So this, now Igor, look at this, all of you guys. This, it's the upside down what I was talking to you about, the looking at the big trend. So the big trend in this case is up. So now I'm having a move to the downside. This downside is not a selling opportunity. I am looking at this move to the downside as a chance for me to buy it at a better price. So the pound New Zealand, you can buy it somewhere around the 1.98, somewhere around here. This would be a good buying place to initiate a buy for the pound New Zealand. So let me show you what I'm going to, how I set up my trade. So right now, I want to see my charts are up. Yeah. So my first selection now, I want to be looking at the ones that have a potential to move. So the euro, I know, is beginning to go weak. I know it's in a downtrend, and right now it is just above the range, about 8 or 9 pips. So these 8 pips, and now it's getting stronger. It's pushing higher. I mean, as you see, it's beginning to push higher now. It's 10 pips, and you can begin to see it right there. So now I can set up the euro dollar as one of the pairs. I'm not looking to buy the euro dollars, but I'm looking to find a chance where I can sell the euro dollar. So I'm going to put the euro dollar here so I can see it. And that now you see I have my trend to the downside, and this move right here, this is a little bit of a short covering. It should be setting up for somewhere around the 134.80, and I will be looking for here for a trend changing. I'm looking for a trend changing reversal before I take it down. So now all this move, Igor, is a chance for me now to look for an entry to take it to the short side. And the way we do that, I'm going to wait until it gives me something over here which indicates for me a trend that is now the downward trend is going to resume. Let's look at the pound dollar, because if the euro dollar is moving up, so probably the pound dollar should be also moving up. And there is your pound dollar. Now the same story with the pound. I am short. I'm still looking for it to come down. And this is what I'm talking about, Igor, or all of you guys. Now this is up. It took a little bit long, but it's not a trend change. This thing is capitulated. We have the short point for one of the short 159.80. I mean, this is one of the short points that we have. I'll put them for you on your screen. On your one point is 159.80, and the other one is 157.06. These are our entries on the short side, and these are what we call the structure points and the significant points, and we take these. I mean, these numbers are part of our character. I mean, we live and die by these numbers. They are not an indicator. They're not a moving average. We take those trades. And so this move here that you see here, yes, the major trend, as long as it's below 157.06, then the trend is down. So if it goes up like this here is a selling opportunity. And if you look at this area here, you see it begins to slow down. And then it begins to give you your failure setups. And just if you wanted to take it just by virtue of it coming back inside the range or to trading below the range, that would be a shorting point. And then you can say goodbye, it will go down, and that's where we are today. And then again, I'm still looking for it to continue down. This again is a selling opportunity. The number one I don't change my mind. I have no opinion. I don't make, when I trade or when I train my traders to trade, we don't think. We don't have opinions. Okay? We have technical reasons that we look at the chart, and if I have something that I see on the chart that will indicate that the market is changing its direction, and then I will go and trade. For example, I'll tell you something. This is a good, everybody has been bearish on the US dollar. Okay? We have been long the US dollar from 74.09, I'm going to show you. And some of you guys, I mean, Paula and several of you attend with us the trade planning session every weekend, and they know that these numbers, I'm telling you that these are the numbers we take. Look here. That is the first one where we started buying the US dollar here at the 74, then we took it at the 76, and then at the 77, the 75, and now everybody on the floor here is long the US dollar from 76. That's the base. Everybody was saying, okay, the trend is down. The only thing that made us change its mind is that when I had a structural failure and the trend has technically changed. We trade what we see. The rule is trade what you see, not what you think. There is no opinions in the market. If you see something that's giving you the indication that I'm going up, then you have to buy it. And as you can see here, everybody that we are with is long the dollars from that day was the September the 6th. So the first thing that you have to learn trying traders, first you have to learn how to get the rules. You understand them. Thank you, Igor. Thank you. So that's it. If it's going up, Igor, you have to take it. Don't try to predict where the market is going to change. Okay? That is, I mean, I was talking with somebody and he said, oh, this thing is going to go up 38%. I mean, it was hilarious. Yeah. He said, okay, this now the dollar is going to move up from 76 all the way up to 83. So it is going to go up. It is going to go up 600 basis points. And then when it goes up 600 basis points, I'm going to go short. So I said, are you sure it is going to go up 600 points? He said, yes, I'm positive. I'm going to wait until it gets, I did my analysis, and it's going to go up 600 points and it's going to go down. So I said, if that's the case, why don't you buy it then? Buy it. Take the 600 pips on the way up, and then you'll have some profit to go short and take it down again. So if you want, I mean, the rules, Ghana, we have them on the website. You have them on radars, on FX Street. The basically is knowing the rules, and we have some workshops you can attend. So anyway, that is the whole idea, looking at the market and taking the trade. So right now, you can you can always see what you want to see, man. I just want to. I'm just sharing with you experience. I'm not. There is. Okay, you're telling me there is strong support. Do you think buying support and selling resistance is good? Is the right way to trade? Okay, guys, all of you, everybody in the room, I'm asking you a question. Who wants to buy? No, there's no depends. You're trading. You have to pull the trigger. Okay? Question is, who thinks buying support and selling resistance, you can make a living? Okay, who buys support and sells resistance? Okay. With PA confirmation, what's PA? What does PA? Price action confirmation, okay. Okay. answer I think Sada gave. No, I mean, no. It depends on, you first have to identify the market condition. Let me show you here. Hold on. It doesn't depend, forget fundamentals, gold. You cannot make a living trading fundamentals today. It's too, I mean, the time has passed for trading fundamentally or using, if you have a trend, okay, that's a good point, trading. If you have a trend, take a look at this. I think I can better explain it looking at the charts, okay? Guys, do you see this? Do you see this move here? Can we say that this is a downward move? Is this support? Okay, is this support at 82? Is this support right here? Okay, so if it comes down here, Abdullah, if it comes down here, okay, so if it comes down here, right back down, you're going to buy it? Who wants to buy it right here? This is support. Who wants to buy? Why no? This is support. Okay, because you saw it. Exactly. If you have a downtrend, no, there is no confirmations. You don't have this stuff. If you have a trend, let me write it for you. If downtrend, then do not buy support. You sell support. Okay, you sell support. Okay, knowing what to do with the market. If I am in a downtrend, I am selling it. I don't care. I am selling support. Every time it comes to support, I'm smashing. Buying support and selling resistance. If somebody says you buy support and sell resistance blindly, I would like to see his equity. If you want to become successful trader in the market, guys, the first thing you have to do, know what kind of market you're in. If now, like today, for example, I am in a market that's a bull market here, like in the dollar. So now the dollar is coming out right there, and it's going up. Okay, is this something that you want to sell it over here? This is resistance. You want to sell it right there? Who wants to sell the dollar right there? If it's an upward trend now and I have a trend to the upside, should I sell that resistance? Absolutely not. That resistance, you should buy it. In a trend, you buy resistance to the upside. In a downward trend, you sell support to the downside. Yes, you can take counter trends training, but as long as you know that you are taking something outside of the norm, and therefore you don't overstay your welcome. You take it quick and you get out of the trade and you don't stay. So let's do a practice. I will do a practice for you so that you can see how it works. So I'm going to get another chart that you don't know what it is. So let's see one. Which chart would you like to analyze? Yeah, I'm going to go over okay, I'll go over the euro. Now, this going over that stuff, we do that, as I said, every week. So every week we do our homework. I'm trying to find the chart. I have a chart that has been marked. Trying to find where it's at. Okay, that's my chart. See, this is what we're doing this is what I was doing, our homework. And these are our trades. I want you to see. Every blue trade, this is a winning trade. We went short, we covered. We took a buy here, this is a small loser. We took a second buy up, a little bit of noise, buy, win, a little bit of noise, and then we're down. So, let me turn this off. Now, let me do this. Okay, this is here the euro. I will go over the euro because Ghana wants. Now this here, you have this big move to the downside. This is it's part of the whole practice, man. I mean, you have to know what to look for. Noise, if you don't know what you look for, but you have to train your eyes to see things. And I don't think we have time today to do it here. But if you don't know what to look for, anything will look like noise for you. And if I tell you, okay, this is noise, you have to understand what's behind the noise. Because there is no two charts that look the same. Okay? So what you need to first, it's easier for you to identify the trend. The trend is much more clearer to see than seeing the noise. Okay? The noise is not going to pay you any money. You won't be able to really make any money from the noise, but you can make money from volatility and you can make money from the trend. So it's easier for you to identify those trends. Now, if we go to the euro, so right here, guys, who wants to buy it over here? And who wants to sell it? I want to show you how it's done. Okay, 2 buys, 2 sells. So only 2 guys are going to trade? Okay. Okay. So the majority wants to sell. And now, right there, you're trying to sell because you have a 1 red candle. But this, yes, the long-term trend is down, but now you have the beginning of what we call a structural failure. So above the 133.15, I am going to be a buyer. See that? Now I couldn't remember the chart. All what I did here is I followed the rule. I picked a place on the chart and I pointed for you, and I was able to see the rule, and I said, who will take it? Right there. That is the rule. It is a breakout. Then you take it at 133 all the way up to 140. You made 700 pips in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. You made $10,000 or $7,000 in 10 days. That is the rule. Knowing the rules, knowing what to look for at the chart, so right here is this resistance, guys. Who wants to buy it right here and who wants to sell it? I'm going to give you a little bit. Now it's coming down like this. Who wants to buy it right there? Who wants to sell it? Exactly. You buy resistance. That is how money is made, not selling resistance, buying resistance. And you can see it with your eyes. Once it gets above that, you buy the momentum high. Now when it begins to come down, you begin to look for. Now let me show you another setup. Okay, who wants to sell it? All right there. Who wants to sell it right here? So training wants to sell it. Who else? John. I want to see how many more buyers or sellers. Come on, guys. So the majority wants to sell. Okay. Do you have you want to sell below the, okay. Can I say the date and time? This here is probably December 2010. And then that begins your move to the upside. All what we did, that is right here, that is your structure point. This is where we bought it the first time. And if you buy the first time, it is going to behave the same way. Then you take it again, and that's your other resistance. So right here, once it begins the move, this now becomes your resistance point. If it gets above this resistance, you're going to buy above the high. And you keep on doing that and doing that. Again, you want to pick the direction. You don't want this noise. You don't want to try to short this. This, you take it all the way. So you took it from, well, let's say the 138 somewhere over here to the 145. Another 700 points. And you keep on, now you get into this, this is what we begin to get what we call the diamond, and you can see now the diamond forming because it keeps on failing to make the highs now. And right there, this is the structure of the diamond, which on this now is the 138.10, which is on the index, and on the spot is 138.36. So there is about 20 basis points or 20 pips between the index and the spot cash, but you can see them both setting up like the diamond. It's a little bit much clearer here, and it moves sideways. So after this momentum, Ghana, it keeps on moving sideways, failing to make her highs and failing to making lows, and it's creating this diamond. And as soon as it breaks the diamond right there, this was your short, and now you're sitting with it since then. Why? I mean, why? Of course, sometimes you try to trade within the diamond because while the diamond is being formed, you don't know that it is being a diamond. I mean, it took this from when this thing began in May 2010. I mean, that diamond 2011 from May. It took 6 or 7 months for this diamond to be put together. So yes, absolutely, we tried to take a couple of trades while in the diamond because we were not aware that it is a diamond. But in this case, we of course no. If it's a diamond, it usually doesn't. If it depends on what precedes it. If you have a diamond and it was preceded by an uptrend, it is going to be there. The diamond is a trend-changing pattern. The diamond is a trend-changing pattern. So if it is preceded by a downward trend, then it is going to turn. The trend is going to go to the upside. If the market is preceded like this with an uptrend, then it is going to turn around and it's going to come down. So it is a trend-changing pattern, and it's going to change the trend that came before the diamond formation. Whatever the trend that came before the diamond formation, that's what's going to change. On what? On the same day with the spot and limit? Whatever you want to call it, saucepan, whatever you want to call it, it is a diamond. It's a four-sided pattern. It's not a triangle. I mean, this could be a triangle. It is not a triangle. It's a four-sided pattern. So whatever you want to call it, I mean, call it Susie if you want. It doesn't matter. I mean, give it any name you want. As long as you can see it and you can identify it, it doesn't matter. I mean, that's all what you need to know is to be able, whenever you see it the next time, that you can take. So if you look at the euro, for example, look at the pound. Yes, I can trigger from the same chart. This is where we trigger our positions. So this is how we set all my charts. And now I look at the euro Aussie. This is what I told you. I'm looking for it to get to the 134.80 and it's supposed to come down. And that is your sell. You could have taken that while we were talking. The same thing with the pound yen. The same thing with... Exactly. Call it rapidity. And that is your pound dollar. So I'm still looking for a sell to the downside. And I look, now this is my workspace. And based on that, I can decide which way I'm going to buy. So let's take the Swiss, because the pound Swiss was setting up nicely. And let's see what I can look at my radar screen. Anyway, guys, we are so right here from my radar screen, the Aussie dollar is kind of moving. Pound dollar. There isn't much of any action really in the market in this New York session. It's Friday. Everybody's kind of scared because after the few days decline of last week, so everybody's kind of scared. Okay, so we're going to look at I'm going to see what's really moving. There's nothing here. Look at silver. Okay. Okay, we are short silver. And we shorted it actually yesterday. Silver charts. We have been short silver. Oops. We have been short silver from the 23rd, yesterday, as I said, and we shorted it at 35. I'm going to show you the chart. Again, that is the chart of silver, and this is where we took the short, and that's it. And you're still looking for a continuation to the downside. I mean, silver has been a very nice trading. I mean, these are all I want to show you the trade. Again, I'm showing you these not for anything. I'm showing you this because this is the way you should learn how to trade. You should be able to take silver from $18 a share, from $18 a pair, from $18 all the way up. This is where it was closed. You need to take it from $18 and you can sell it at 41 to be able to make $23 per ounce of silver. That's the way, guys. If you want to make money, that's the way you need to be trading and making money. Understanding what price behavior is, understanding the structure of the chart, being able to know where the market is going to turn, what trades you are going to filter, and how long to stay in the trade. Plus, what should I be buying? The same thing with gold. So what's happening today, guys, is so that you know, most of what's happening today is long liquidation. This is where we're short, and this is long liquidation because people now, a lot of people are getting out of the market because of the margin call. Okay, the guys, what we're going to do, guys, for you, and this is because we're starting to cooperate more with FX Street, and in recognition for FX Street, we are going to, every time we do this session, I get a lot of emails, people asking me, how do you do the structure, how to identify the significant point, and what is the significant point, and what it is, and how we trade. What we're going to do for you, everyone, that we are going to give you 2 sessions. One, what we do is what we call the trade planning session, and this is usually either on Saturday we do it, so not this Saturday, the following Saturday. It's going to be the Saturday in October. And what we do in it, we are going to plan and identify where we're going to buy it, anything, where we're going to sell it, and where will the trend change, which we call the structure points, and we populate all that, okay? And then we do this on Saturday. You can watch it or watch the recording, and then Monday morning, the following that, so not tomorrow, but the following Saturday, and then the Monday morning, we are going to send you an invitation to come to our trading desk. This is where we all trade live, me, all my traders, and so you will see us. We get into this room at 7:30 in the morning, London time, and we trade for 2 hours, which basically we plan what we're going to trade. We see which pairs we're going to trade. We see where the prices are this morning from yesterday, so we know our bias if we're going to go long and short. And then we set up our trading platform, and then at 8:15 we start trading together live, and we show you how we trade and how we execute and how we see the trades. So if you want to join us, again, you're very welcome. Send an email to Matt or Training Traders or Info, and they will send you the password to both the trade planning session on a Saturday and the open room. Okay, what else do you want to look at now? Any other pairs you want to look at trading or buying or anything? Oh, the Dow, we're short the Dow, the S&P, and yeah, I mean, all these trades, the Turks are taking them. We trade everything. We trade, so I'll show you. We are short the S&P, the Nasdaq, and the Dow Jones. I'll show you. These are all the stuffs we trade. Where is my S&P? Yeah, sure. I'll look at gold. So right now, I mean, the S&P were short from about. I'll tell you exactly where the short they're taking the short. So the short was taken actually yesterday. That was the first short. The first short we took at 1285, and we covered it at 1201. So we took 85 handles on the S&P, and we're short now again at 1112. So we're actually pretty much where we shorted it from yesterday. But yeah, you're looking at a big push to the downside. I mean, this is really turning bearish. This is really turning bearish. Gold. Gold is short now. I mean, the short from gold was the 70. Once it took the short yesterday, I mean, this is the point 1725. Once it took that, this is a liquidation. It's not a bear market. It's not a trend change in the gold. This is a liquidation, long liquidation, and probably it will take us down maybe to the 1600s or so, and then before buying will come in again. So okay, so let's first see what Sayed wants. You guys, if you're in London, you're very welcome to come here in the office. We'll show you all that stuff. I mean, no strings attached. Don't worry, we don't do that stuff. So if you want to come and take a look and see how you can learn that, you're very welcome to come to the office if you're in London. But so let's put the Aussie for Sayed. What do you want about the Aussie side? I mean, it is a short. I mean, the Aussie is a short. And again, here you can see, I'll show you you want to be, this was the first short, the 108. And that's your failure. And that's the second structure, the 101.82. And right now, if you're looking at, you're sitting here at the 96.52. Write it down as say 96.52. This is pretty much where it nearly put the low of the day today. Now, if it takes out the 96.52, you press the short. No, it's not a failure trade yet. I know you are on the buy side. It's not a failure trade yet, sir. This is just after this big range day, that is usually the pause that follows. So it's just simply a pause. It is not a failure day. So, but still, if you wanted to do something, anywhere over here, you're looking for a continuation to the downside. Yes, okay, so you know yes, if you're day trading it, Sayed, okay, so it is, that is your, okay. Yes, if you're day trading it, okay, but I would rather have you, I would rather if you actually try to find a place to short it. So what you do is, now you see this move up, you can scalp it over here. Okay, but you don't want, if it gets below 97.25, which is the market side, you want to take it short. This thing, after all this move, it should make a reattempt to test it. No, what do you mean normal? These horizontal, the way we trade then, okay, the way we trade, remember, the principle is we are technical traders, okay? We're not analysts. So we need to identify visually on the chart certain areas where it changes our bias to where we're going to buy or where we're going to sell. These are what we call the neutral zones. And these are made out of two things. One, it is made out of time. Two, it is made from the number, made out from a number of trades that go through that specific time. The best way I can explain it to you, if you look at something like, not like this, but if you look at something, if this is a stock, for example, no. If you have something, hold on a second, it's called time and sale. These are all the trades that go through, and basically we count the ones that going on the bid, which is being sold, and the ones that go on green, that means they're being bought. And okay, so based on that, we are able to see if there is any deceit coming in. We really want to know the real side of the market. So based upon the number of trades, and in some instances, if we're using not foreign exchange, but if we're using other exchange-based instruments, we can actually have the count of, so for example, if I put Apple here, you can see the number of stocks or that go. So we're actually counting these. We're actually counting every trade that happens within this narrow period of time. And based on that, we calculate this zone, which is the neutral zone, plus what we call the market size. It's not a moving average. It's not connected. It starts from the beginning of the session. Once the price is above the key line and above the market side, this here is our buying point. So right there, when you will, for example, and this is what we have developed the software. So if you see here, for example, right there, and this is what you're looking at on your chart, and you want to decide, okay, what should I do with this? Should I buy the Aussie at 97.70 or what should I do? Now, that is your neutral zones. Then, so you decide, okay, I am not going to be trading there. Okay. Please don't do the private, put it on a read. And based on that, you decide, okay, this is the neutral zone. I am not going to be trading it in the neutral zone. So I will buy it if it gets above the neutral zone, or I will sell it if it gets below the neutral zone. And the market side, as you see this, tells me the bias. If the price is above that market side, then I am a buyer. And then you turn on the strategy, you turn on the rules so that you're going to take the trade. And now we'll say, okay, I'm going to trade the Tokyo session, which is these two lines. And you'll see now, and this is now, you're following the same set of rules, exactly what your rules is. And you can see as soon as it gets above this, now I'm going to get a buy signal. So right there, you see now it gives you like this, it gets about right there. Now you have a buy. You don't need to think. This now puts you on the right hand side. The software says now it's a buy when it has broken above the neutral zone. There is more buyers than sellers coming into the market. They are buying more. So the right side that you have to lean on is actually to be a buyer. and this is where you initiate your buy signal, and you're buying it at 97, and like I showed you, and this is where you have the power of what we call price behavior, is that you can put your finger any place on the chart and you say this is the correct buying point, and this is now where you take the trade. So right there, now my buying point is 97.71, and you look below it where it says market side. The market side, it is as it's not as reliable as in the what do you call it, the exchange traded instruments, but it is having it is better than nothing, and it actually is, the way we have put it together is actually working very well, and I'm going to show you. But right now, you see now the buy signal is 97.71, and the market side is right below it, 97.70. And therefore, we have, now you're long, you're staying with the trade, you're staying with the trade, you're staying with it, and you see the market side following it. Now you are a long position, now you're okay. Now it breaks about, and now once it begins, it comes back, you will probably see it will get pretty much to the market side. As soon as it gets below the market side, we close the trade. And that dash line means we close the trade. So you took it at 97.70, you closed it at 98, let's say 98.13. No, sorry, you closed it at 98.18. So you made 40 pips on that. Thank you very much, and you're done. Now, we collect the data from all the bid and ask that go through your broker. So, for example, we use PFG, and we use, for example, here this data is coming from Coronex. So whatever your platform is, of course, if you're using a decent platform, but if you're using the MetaTrader 4 or stuff like that, I mean, you really don't have the. So we take our data from PFG or eSignal, and we are able to come with that. The other to calculate the market side, and again, it is one of the components, and I want you to see one of the. It works much better. It's also as strong with the. Now you can see that that it pretty much, when you have a good trending day like this, it will keep you pretty much in the market, and you can use it to trail your stops. And the bigger the distance between the market side and the price action, the better it is. The bigger the distance between and these are all typical behaviors that I mean, this is stuff we use, and we train the traders, and we use how to use the software, understand that, and that tells you now you can maximize your trade. So, for example, see here, if you're looking at this, I think Thanos, if you take the trade from here, okay, if this is where you go short, where would be the best place to close it? Once I have a trend like this, probably the best place to close it is somewhere around here. Now, the combination between the neutral zone, the market side, the momentum that comes into the market sets up the trade for us. So if I put on, again, and we use we trade every day because we cannot watch every single trade ourselves. So we choose our setups, and we take the, again, I turn the sessions like 1 and 0, like and now you can see that keeps you in the trade, so you don't cut your profits quickly. Look at this here. That is your trade. You took the trade from here. That's, I will tell you, that's the best trade. You go short at 99.86, and it keeps you in the trade, and it tells you the trend is continuing. Stay in, stay in, stay in, stay in, and once it begins to change, you close it right there. Thank you very much. You made 150 pips on that trade. Love it and leave it, and that's it. So using that, knowing how to incorporate the key lines with the market side, with the strategy. And somebody was asking me what kind of candles we use. Well, we have also something else which I want to show you. I want you to look at the charts. As you can see here, the candles are red and green. You see that? So green means it's going up, red is coming down. One of the things when I used to work on the floor, the traders would buy something, and as soon as they make some money, they get out of the trade, and they get out too quickly. And of course, we ended up leaving a lot of money on the table. So what we have done, once we were able to measure the momentum in, we were able to change the color of the candles to make it to stay with it. So as long as it's red, this means I'm staying with the trade and I'm not going to go out of it. Only when it begins to change color, then the trend is going to go to change direction. Igor is saying there are two trading floors, Igor. One that I used to work with in New York. This is the New York Board of Trade, and the one we have here right now in London. We still have our training, our traders are here, and the programmers, and everything that we have in this software, Igor, is exactly, this is the one we have here in London. Everything on this software, or the way we trade, is based upon necessity. We don't have any bells and whistles. Everything is there is because we need it, and we needed to use it in order to make a trading decision. So, and for example, one of the things that we did, the market side, was because most of the traders now used to use, have you heard the term iceberg orders, or traders hiding their orders or hiding their intentions, and you don't know if they're buying or selling, or the level 2 NASDAQ. I mean, all this level 2 NASDAQ and the OTC levels and the stuff that we show you, you want to see the market depth. All these are basically tools made for deception. They are trying to deceive you. They are trying to, for a lack of a better term, take advantage of it. If you wanted to buy $10 million in euros, okay, think about it, okay, would you go and announce that, hey guys, I am Igor, I want to buy 10 million euros, and show that size on the OTC? Would you do that? Would you show the world that you have a big order and you're squeezed and you want to buy 10 million or 100 million? Nobody does that. No prudent, absolutely, no prudent businessman would do that. If you want to sell $1 million something, you wouldn't say to the world, hi guys, I want to sell $1 million. No, you're going to hide your intention so that you can get the best price. So why can you tell me, if you wouldn't do this, if you would not do this yourself, why would you expect a company like, for example, Goldman Sachs, or like this, for example, like in stocks or whatever, they tell you the OTC, yeah, they are going to buy. Why would they announce? Why? This is basically, if they, how many times did you come in and try to buy, and when you get to this price, they took the order away? So these are all tools. Basically, you should look at it with very skepticism, because if I needed to buy 10 million today, I don't need to buy it tomorrow. So if you try to find out what I did today, you might be able to, but it's not going to be, it's not something that we're going to use for tomorrow. So Maher was saying, isn't it an ideal entry point to long the Aussie dollar from the current market price? No, not for me. Again, all of that move, Maher, okay? You want to day trade and scalp. Absolutely, there is nothing wrong if you want to scalp it. If you want to take a trade that's actually going to pay you a lot of money, it is actually it is what we call now, I'm looking for a reversal somewhere over here. It hasn't developed yet, and then I'm going to take it to the short side. You have to keep a differentiation between two things. If you are taking a long-term position and you take it in the direction, if you're taking a trade in the opposite direction, then it is very short-term and you're looking for 20, 30 pips and you're out. Okay? As long as you know what you're going to do and what is the market condition that you're in, you can always trade. Okay? Panos, is it better to take a partial profit or to take the whole position out? The way we trade, okay? If you're going to go out of a trade, you're going to go out because there is a reason to go out. Okay? That reason, if it happens, is going to happen or occur on all your positions. So if right here I have a reason to close the trade or to go short, then I'm going to go short on all my positions. Now, if you're looking at that to manage your account, it depends on your size. I mean, how many lots do you trade? Is it okay? I mean, listen, as long as you're doing it and you're comfortable with it, then, but personally, I like to go in and I like to get out. Again, that's a personal preference. It's not, I know some guy would say, okay, buy it and you buy 3 lots and then when you get 10 pips or 15 pips, get out. So that, to me, this is nitpicking and, it's not my style of trade. I like to go in. I like to take 500 pips, 600 pips. I like to get paid. I don't like to nickel dime the market, and I don't like the market to nickel dime. I know which way it's going, and I can sit and withstand these moves, and that's it. And so, I mean, I know some of the names that I see here. I mean, they have been with us in the trade planning session on Saturday when we do our planning session. They all know that we've been short the euro from 138. I am short the euro from 138.36, and I shorted it initially from 143, and I'm sitting on it right now. All the swings is going up right now. I mean, I'd rather take one trade, make 600 or 700 pips, without any anguish and, and whether you're day trading or whatever, and you're done. You want to go and enjoy your life, buy something nice, buy your girlfriend or wife something nice, enjoy your... You trade to live. You don't live to trade. Yes, read the Mark Douglas. He has lovely 2 books, Trading in the Zone and The Disciplined Trader. And you can, and you can also read the book by Faith, Curtis Faith, the Mind of the Turtle. Echo, okay, what is your average stop loss? Your average stop, all my stop losses are technical, okay? We don't use 20 pips and 30 pips and 40 pips stops. These are, Yes. Who are you? Who's gold? No, Mike is with us. Who's gold? He, the guy that I'm saying is, the book is Mark Douglas. Okay, the stop loss is like this. If I am going to go, okay, let's say I'm going to go short here. You need to place your place technically. What reason behind your noise? It's, yeah, you and I, guys, everybody. I mean, you know how many million, no, it's not volatility. You know how many million people trade the euro? If you think there is a million guys trading the euro every day, this means you have a million opinions. You have a million guys that made they don't agree on anything. So you have a million of guys disagreeing, and that's why you get this volatility, this noise. And that's why you want to avoid it. You cannot agree with a million guys what they want to do. So you want to step away. Don't waste your time. Just put yourself. The session tomorrow starts at 1:30. You come in at 1:30. We have like a recording for you to show you how to benefit from it. And then you can stay as long as you want. And it is, what noise? This noise here? And then it is recorded and it's uploaded on the website, so you can visit it every single day and pinpoint your entries. And yeah, so it's 1:30 British Central Time, British time. You need, yeah, there's a lot of women in Forex, but they can't make their mind on anything. So you need to take the big direction. That's why that's why you want to stay out of the noise. That's why you stay out of the noise. You want to make money. You don't want to analyze. Okay, guys, we got another 5 minutes, so I'm going to open for a Q&A. If you have anybody has any questions. My stop is based on the chart, okay? So if I want to take it here, my stop is above the height. I need to tell the market. I need to let the market tell me where it has stopped going higher or where it has stopped going low. But I want to show you something, guys. Somebody was there. What is your average stop? Thanks, man. What is the average stop you like to take? How many pips? Let's say you want to take 25 pips. Okay, good. Listen now, hold on. If you want to take 25, let's say average 30 pips, you can come into your chart and put in an indicator. There is a good indicator, which is called the average true range. Okay, and use there is a template which is 14 bars. So use that. Hold on a second. So. Now, if you see here, your average true range is about, or because of the volatility, is about 80 pips. See that? 80 pips. So this means, Panos, if you want to trade the euro today, your average stop should be at least 80 pips. If you put a stop smaller than this or tighter than this means that you will be stopped out. And that's why the fan is getting killed by the noise. Why? Because he's putting a stop which is smaller than the noise. So you need to measure what is the noise, and the average true range measures the noise for you. In this case, it is, you do it if you find it 8 or 80. In this case, you identify the one, I mean, this is the sideways because it's not, so right, if you're going to do it now or today, So right now, your average stop today for the last 14 days, it's about, in this case, you take it twice that, you need about 35 pips or 40 pips on that trade, take it short. That's your minimum stop. So if you put any stop which is less than twice the average true range, then you're using a very tight stop, and probably you're going to be stopped out. No, you use the average true range only when you initiate the position. So you know what is your stop. But once you're in the trade, you turn off you don't want to see the average true range again. It's not necessary to look at it. All what you're doing, you're finding now, what is my stop? So it's 117, I multiply it by 2, so it's 34. That's my stop. Then you say, thank you very much, bye-bye. You put your trade, you put your stop, and you find something else. You use the ATR for the time frame that you're trading. If you're trading a 15-minute, then you use the ATR on 15 minutes. If you're trading a daily, you use the average ATR on the daily chart that you're trading. Okay? Of course. We have all the turtles, all of them are trading the company's capital. They are 70 turtles. So I'm happy to disclose it. I already disclosed it to the world. They are here, they're trading our company money, and knock on wood, they're making a lot of money. They are professionals now, they know what to do, and they can trade. No, you can get this from us. Besides the turtles, no. I mean, I only fund the turtles. You're saying the company money, so the company money, the firm's capital is for the 16 turtles. They're doing very well. Anybody that wants to come and take a look, you're very welcome to come and see them here, see them on the trading floor. God bless them. They're trading. I'm very proud of them. Probably next year. I mean, it's such a... Probably next year, and from what I see so far, I'm encouraged. Okay, guys, we're up to the time, so I don't know. What do you mean? Will I update? Oh, hi, Paula. Yeah, I'll see you tomorrow. Thanks, Ted. Okay, let's see, I've been there. Okay, guys, we got 2 minutes. Anybody has any questions before I didn't, okay, that's my email, or you can send it to Matt Travis, and he will forward it to me, but that's my email. Okay, guys. All right, have a great weekend. Best of luck next week, and I hope to see you soon. All right. Thank you very much. Thank you, and bye-bye.